Hey everyone, welcome back to the Atlanta Startup Podcast. My name is William Leonard, your host for today, and I'm really excited to be sitting down with Nicole Bentz, who is a VC at S3 Ventures. Nicole, welcome to the podcast.
Hi, thank you so much for having me.
Yeah, I'm excited to talk more about, your background, S3, and we'll start with S3, right? Because
Sure.
it is a pretty storied firm out of Texas, right? Single LP structure. Your AUM
hmm
is, over 900 million now, and you've got a plethora of great investments and exits in the portfolio. So maybe you can
Sure.
kick us off and tell us more about the broader S3 thesis and how the firm thinks about executing its investment strategy.
Yeah, definitely. Um, so S3, we've been investing for the past 18 years now. Whole team is based in Austin. As you mentioned. So we've got a little over 900 in AUM. Our seventh fund, which is a $250 million fund that we kicked off last year. Um, and as you said, we're primarily focused on Texas-based companies. Um, Always have been since the beginning, opportunistically investing in the middle of the country. So basically not San Francisco, but generally speaking, like in our backyard, right? Um, we are mostly investing in B2B software businesses. We are, in industry agnostic as a firm, but primarily investing in B2B software, and then a little bit of medical device, some digital experience, consumer, that sort of thing. Um, and so we're early stage. We'll do C to Series B investments. Initial checks start anywhere between 1 to 10 million. Uh, but as you said, so we like to stay on for hopefully the life of the journey. So we allocate 20 million of capital per company over the life of the investment, and a lot of that is aided also by our LP structure, as you mentioned. So we have a single LP, which is a massive luxury for us, but really ultimately means two things for our founders. Number one, it frees up our time. So, part of our thesis is and kind of our value add as a firm is we like to get really in depth with our portfolio companies. So we like to roll up our sleeves, get our hands dirty, and hope and help our CEOs scale the business. Um, Secondly, it gives us a lot of flexibility in actually how we allocate capital. And what I mean by that is we can actually flex up our funds over time. Um, we frankly kind of never run into reserve constraints. And so we can actually be patient capital for our founders and really back that up. Um, so that's kind of how we differentiate ourselves, and a little bit more about, I guess, our thesis.
Nice. And you know, C to Series B, 1 to $10 million checks. And you mentioned that the team is primarily based in Austin.
hmm
And I think it's so
All,
fast.
yeah,
Yeah, yeah,
all, sorry,
everyone,
yeah.
yeah, everyone's in Austin, right? And I think that's so fascinating because, you're leveraging this geography to win these deals. Like, why focus on Texas deals and in middle of the country, right? You
hmm
could be, positioned in the Bay, Boston, New York, which I think there's a lot of conversations as to why you wouldn't want to be positioned there.
Sure.
But, tell me more about how you all are leveraging being in Texas in Austin to win those hyper competitive deals that are maybe
Yeah.
in the middle of the country and even in Texas as well.
Yeah. Yeah. Um, I'll say very quickly on, people ask us why Texas. I'd say the entire team and S3 as a firm, we are incredibly bullish on Texas as a whole. Um, we think it's poised to be the third largest venture market by 2030. So there's increasingly, I mean, there's a lot of domain expertise here in Texas. Major industry leaders. There's a lot of reasons why Texas has become, and I think will continue to become, such a hub for innovation and for emerging startups. Um, you know, with the team based here in Texas and really focusing on primarily Texas and then kind of middle of the country, um, I think the benefit and why we do have that geo focus is twofold. Number one, I think it really does help, especially at the early stage, to truly kind of be boots on the ground in the ecosystem. Um, it's a massive advantage for us in terms of our teams up here in Austin. many of us have lived in Austin for 20 plus years, um, or close to 20 years. So our entire network is here, both professionally and personally. And that means all the way from deal sourcing to a lot of our successful founders are here as well. And that's often where you get the best referrals, right? From other founders. Founders are usually the hardest on other founders in terms of assessing, hey, have they really got it? Um, but back to kind of why it matters that we are here locally investing out of our backyard. Um, it also means that our we can really provide that assistance like in person. You can it's hard to do. Zoom is wonderful, but it's really hard to do like in Zoom whiteboarding sessions with an early stage company when you're going through, hey, we need to map out, we're trying to reassess like our ICP, right? Let's have a working session. It's so much better to do that in person. um and additionally, I think we try to provide as much kind of assistance post investment as we can. We try to get really in depth with our portfolio companies. So to the extent that we can also open up our own network to portfolio companies, and founders, introducing them to potential customers, potential future hires down the road, that sort of thing. So a lot of benefits in being here as a whole team, and then also focusing in Texas and in the middle of the country.
Yeah, I think we adopt some of that similar framework and think
Hmm.
at Valor being a hyper regional focused firm, especially at
Yeah,
the early stage, like you mentioned, oftentimes it's so much better to go down the street, meet with the founder for coffee, um,
sure.
just having to get on Zoom and do a 2 hour strategy session. So I think you get that personalization and just better relationship building that I think
100%.
as throughout the company and how it grows and progresses as a startup. So I can certainly
And
resonate with.
I couldn't agree more. And I think that's across the ecosystem too, not only with the founder relationship. These are like 10-year relationships that you're truly weighing on both sides, both as the investor and then as founder CEO. You want to make sure you like that person, and even when you disagree with them, that you can still work with them at the end of the day.
Yep.
And then I think across the board, like you know, we've co-invested with Valor. Really appreciate the work that you guys do. It's great to also have that network here regionally across other investors, other firms as well. So a lot of benefit to I think to being kind of hyper focused on a certain region or geo.
Yeah, yeah, I agree. And shout out to RPO, the deal that we share. And
Yes,
yeah, yeah. Shout out to Doug and the team out in Raleigh,
love
Durham.
love
Um,
Doug.
yeah. And Nicole, you've been in the realm of VC for some time now. You started out at PwC. How did you really make that foray into venture and why did you make that move?
Yeah, yeah. So backing up on the why first, I went to KU for college, and initially thought it's a long story. To make it short, I thought I was going to do pre-med, and basically after organic chemistry figured out, hey, that's not my calling actually. And from there, kind of bounced around, figured out I wanted to do business, and my mom's an accountant. She basically was like, hey, you should try that out. Ended up really liking it as a major, but soon realized I never actually wanted to pursue that professionally. But kind of looking back, one of the best things I did, because I had basically spent 2 years bouncing around majors. And so I was a junior, but nothing really transferred over credit wise. And I was like, I need to get really involved just to stand out. Um, and so I ended up getting involved with like the business schools student governing body, effectively is what it was. TA'd for a couple classes, and then got to know their director of entrepreneurship. And so that was really what opened my eyes to startups, and venture capital. He's an angel investor as well, and he had a class basically where he used students as like effectively free consultants, right? And so I remember basically being in a meeting with one company that he was advising and had invested in, and I just loved the conversation and talks we were discussing, the problems that they were facing. And I was like, how do I do this like as an actual job? um, but I was an accounting major. I went to KU, which I don't think any VC firm, most VC firms don't know where that is, don't know what school that is. And so I was like, how do I get there? So I ended up going through doing the Masters of Accounting and PwC, ended up like never actually using my accounting degree, um, but stayed close to the startup community where I was in, so Kansas City at the time, um, and just had an opportunity to join a local seed and Series A firm called Valor Capital. So jumped at that, and learned a ton. It was a small team at the time I joined, and I was squarely the most junior member, and probably touched and did a lot of things that I had no business touching at the time. But it was an incredible learning experience. Loved the team there. Um, at that point, kind of this was now 2020, I guess, yeah, 2020, and a chance to join S3 in the, I guess, at the end of 2020 there, and I loved Austin, loved the Texas ecosystem, and so that was what kind of brought me to S3 eventually. Um, but yes, I think a mixture of uh, luck in a lot of ways, but also building out that network and just staying close to the startup ecosystem where I was at is what got me into venture.
Yeah. I think our stories are very, very similar in that, you get this experience working in undergrad with some startups. I was working with
Mhm.
student-led companies at my
Okay.
university, and I was like, man, this is awesome. I want to do this full time. I was basically like a Swiss Army knife,
Yeah.
um,
Yeah, this
working.
is a lot more fun than what people are describing my job would be like at the career fair after college. Like, I want to do that.
Exactly. And yeah, no, I think it's always interesting to understand someone's path into venture. There's no formula to getting into VC. I've seen people come
Hmm.
from psychology backgrounds, chemistry backgrounds, engineering,
Yeah.
finance, whatever it may be. So it's always fascinating
Yeah.
understanding how you break into an industry that is so difficult to break into historically. But
Yes.
and in thinking about your time in VC now, right? You spent some time at Flyover Capital. You're
Hmm.
coming up on 3 years with S3, and you've looked at hundreds, maybe even thousands of deals, and you probably had to say no to most of those deals, right? That's just the nature of the game of being a VC. But
Can't do
curious
them
to,
all.
yeah, exactly. Can't do them all. Curious to get your take on some of the frameworks for startup diligence at the early seed Series A stage that you've developed and refined over your time of being an investor.
Yeah. Um, yeah, I think it differs by stage, obviously, right? So the frameworks that you apply at an A and B company are not the same frameworks that you're applying when you're evaluating a seed company. So, if I'm looking at a seed company, I think it's, and I should say S3, we primarily, I mean, we invest post product, post revenue, right? So it's not seed or pre-seed like idea on the back of a napkin. It's you've got customers, they're paying you, might be small dollars or not what they should be paying you eventually, but they're at least paying you, right? So the questions in my mind at that point, and when I'm evaluating a company, um, are really are centered around, are they showing signs of early product market fit? Um, so like, do they have paying customers? Are those customers using the product, getting benefit out of it, that sort of thing? And primarily after that, the majority of our diligence is really focused on the team in the market, when it's that early. Team, I'm thinking of questions like, and this is kind of how, it's not formal, but I think I frame a lot of my diligence in asking myself a series of questions. Questions like, hey, is this a team that I think can grow the company? Um, Importantly, is this a team that can sell the product? Especially, we primarily invest in, right, B2B software, oftentimes enterprise software. It's going to be founder-led sales for quite a while. So I think I tend to invest and have, and have a preference for founders who can sell. Um, the other thing that I think is really important at the seed stage in particular is figuring out if there's founder or CEO market fit here. Do they have some sort of unique insight or experience that gives them almost an unfair advantage into building this particular business at this point in time, right? Um, and then we kind of alluded to this already, but one of the last questions on team is do I want to? And it shouldn't be in this order, right? Hopefully, you're figuring this out sooner than later. But is this a team that I want to work with for potentially 10+ years? Are they coachable? Um, are they someone? Is this a team that I also think could go recruit and hire like A+ players, right? Well, will others around the table say, "Hey, I want to go join them?" Um, and then on market, some of this is simple, right? Like, is this a venture backable market? Building through a bottoms up market sizing approach. But then outside of that, figuring out if there's some sort of unique structure or dynamic at play. Um, there's there's a million reasons why businesses fail. One of them is, and probably the hardest one, is timing. Right? You could do all the right things, have the right team, right product, right approach, but if you're missing the timing element, then it's all for nothing. So what's unique about this time in the market, whether that be some sort of regulation or key technology that has now enabled this product. Um, so those are some of like the questions that I'm answering at the seed stage over time and trying to figure out through due diligence.
Nice. I can totally agree with that, right?
Mhm.
You have this framework that varies by stage. And I think one
Mhm.
of the biggest things that we ask is why now? Like, why
Mhm.
is this going to get mass adoption right now? And like you
Right.
mentioned, a big piece of that oftentimes is regulation, especially within healthcare, climate tech,
Sure.
and I think soon to be like AI. And we hear
Mhm.
about government intervention and regulation that's really impending with AI, and we just don't know how it's going to impact the industry. So I think there's oftentimes a lot of opportunistic ways to build around regulatory tailwinds as well. But
Yeah.
right, and you've got this framework. Um, yours is sounds like it's primarily centered around team, market, why now, venture scale
Yeah.
opportunity. Once you do complete this diligence, you say, "Hey, I want to
Mhm.
move forward with this investment," and you've got some board observer seats as well. Like from a non-partner level position, how are you supporting founders? I think it's something that oftentimes junior VCs want to do, but often maybe times struggle with imposter syndrome of, I'm a junior VC, like I'm not a partner. Can
Yeah.
I really bring value add to this founder if I'm a board observer or whatever it may be, whatever position you're in? How do you
Mhm.
think about bringing value to founders from a non-partner level position?
Yeah. Um, I think I think you mentioned earlier that when you were in school, you felt like you were a utility knife for the companies you were work with, and that's kind of I describe myself as a utility player. Um, but yeah, I mean that's kind of the exact approach that we use and that I take. So a lot of it is, it can be anything from helping a company build out their financial model to helping them think through some option banding, right? If they're about to go raise or hire a bunch of people. Um, some of it is helping out making introductions to the right types of people. So it varies, and I think it really kind of depends on what the company needs, and what it also, we're not going to insert ourselves where where we're not needed. So if the founder is willing to raise their hand, or doesn't, that's not on their priority, um, that's not prioritized on their to-do list right now, then we're not going to force ourselves into a situation. um, but I'd say in terms of, what how to provide value as like an in a venture, a VC early in your career. Um, one thing that I've noticed is that, and can be, I think we discount, as junior VCs is the amount of reps that we have seen compared to even some of the most seasoned CEOs and executives. Um, and I'm not saying that by any means to like toot our own horns. I mean that it's simply we're looking at companies, meeting with CEOs day in, day out, and you start to kind of put patterns together, do that pattern recognition and see, hey, I've seen this movie before. Here's the two ways that this is likely to pan out, kind of thing. Um, hey, I know that we're keeping an eye on cash right now. You know, you want to go raise out in 9 months. Let's kind of work backwards from there because I know how long a fundraise will take. Um, so things like that. So a lot of it, I think, is somewhat VC and fundraising focused. But
Mhm.
keep in mind that I think that you as a junior investor uh, oftentimes have more experiences in the fundraising realm, within VC, even stuff like like option grants. Um, I work through option workbooks, at least once a week, right? Or and you probably, as a junior investor, know a lot more of the intricacies than a CEO does. Um, so I wouldn't discount that. Uh, I'm not going to sit here and I would and say that I'm certainly not a marketing expert, a sales expert, right? So I would hope and lean on the experts within the team for that type of stuff. Um, but those are kind of some of the areas where I personally at least try to provide value and think that you as a junior investor often do have unique insight, even if you think, yeah, I'm not sure here.
Yeah. And I think that's what it's about, right? Helping the founders see around corners that you've historically seen, especially if it's, a first time founder, but you're, junior VCs that's been working in the industry
Mhm.
for 2 to 3 years now. And,
Right.
companies on a similar trajectory to what you saw from the last portco you worked with. So
Hmm.
you're right. Being a Swiss Army knife, being that all hands on deck team player
Hmm.
is really one of the best ways to exude your value. Great thoughts there, Nicole. And I want to shift a little bit to talk more about the current state of the, let's say, the C plus Series A market. We've seen a lot of doom and gloom on social
Hmm.
media, and in the articles from PitchBook and Crunchbase, whatever it may be. Curious to get
Yeah.
your thoughts on what you're seeing and then how founders who are in the midst of a raise, or thinking about raising in Q1, how they should approach the market now.
Yeah. Yeah. I think a lot of what you are seeing out in the market on PitchBook, Carter's been doing a lot of good reporting lately as well. Is right. Like it's a really tough market right now. I'm not going to sugarcoat it. The number of financings getting done, round sizes, valuations, revenue multiples have all compressed significantly. On top of that, the number of bridge rounds, insider rounds, even down rounds are all increasing. Um, it's just the bar is just simply higher for seed and Series A companies than it was even a year ago. And if you, I mean, I think right now we're in, November 23. Like a year ago, we were already feeling that compression. Um, so I think the bar has continued to raise. That being said, I do think that it's close to stabilizing. When you look at kind of where it's trending, it's actually leveling out back to kind of 2018 levels, which if you think back at the time, those were like 10-year industry highs in VC. So I think it's stabilizing and it's leveling to a place which is still a good place. It's not like a total bottoming out at the the peak is not like uh, kind of .com crash, or sorry, the valley is not like .com
Mhm.
crash levels. Um, in terms of, I think that strong businesses will continue to get funded and continue to be able to raise. Um, but I think a lot of preparation goes into that, right?
Mhm.
So if I were a company raising right now, I would focus not only on the vanity metrics, like ARR, and some of that it's not, I think there's a lot of confusion on the founder side sometimes around where how much weight is put into that. um, it's important, but it's not end all be all. If you've achieved a higher ARR rate, run rate, but you've got a leaky bucket and, you're churning customers left and right, then that's not a fundable business either. So really being keyed into the business at all levels, understanding churn, unit economics, things like LTV to CAC, things that I think make founders sometimes roll their eyes when early stage like seed and Series A investor mentions them, but they're important to the business and they're more important now than ever, especially walking into a fundraising environment that is completely uncertain. Um, you might have a strong business that would have easily raised uh, really quickly a year and a half ago, 2 years ago. It's not going to be the case today. So you need to make sure that your number one job of the CEO, the business needs to open tomorrow, right? You need to continue to survive and advance. Um, so I think
Yeah.
as if you're keyed in on like those metrics, and building a really scalable and efficient business, then you will still be able to fundraise.
One thing that I'm seeing still to this day is I think a real disconnect of founder expectation for
Mhm.
valuation and sort of the reality of where valuations are today. I think I'm seeing a lot of
Yeah.
founders who are maybe a bit stuck in 2021, from a valuation perspective and from a traction perspective as well. So I
Yeah.
think one thing that's continuing to persist, but like you said, the best companies with the the undoubted value prop are still getting funded to this day. We've recently funded several of those types of companies,
Mhm.
and I think the best thing now is just relationship building and, like you said, focusing on metrics outside of ARR, because your ARR looks great, but what is your churn like? What is your
Yeah.
retention like? What is your what do your ACVs look like? How do
Mhm.
you scale this to be a venture scale outcome? Is similar to what we mentioned earlier, thinking about the market. So there's a
Yeah.
lot to focus on, and the metrics aren't black and white ever.
No, no. And I think too, like making sure that you can run as efficient of as a fundraising process as you can. Like fundraising is a distraction from you running your business, like full stop, right? So doing, especially in a down market, doing everything you can ahead of time to make sure that the fundraise is as efficient as possible and that you get back to running the business, I think is really important. I meet with founders and it's like, yeah, I'm raising, and they don't have data room put together. Oh, I'd love to see a pitch deck. Okay, give me like a week and a half, 2 weeks to put it together. Like do all that in advance.
Yeah,
Not only does it make the process faster for you and more efficient, but also like that's just frankly, that's a bad signal to an investor. If you're telling me that you're going out to raise, but all the materials haven't been put together, right?
yeah, and that kills momentum. Honestly, like you're
Of
you're
yes,
excited about a company, you pitch it internally, you know,
yeah,
you do your diligence request, and it takes a week and a half to get it back, and it's like, wow, like
hmm,
lackluster
yep,
excitement now. But hey, things happen. We understand that. I think as investors, but transparency
sure,
in that process is very important. So yeah,
yeah, yeah,
but,
definitely.
yeah. And Nicole, I know you're so passionate about this Series A stage. I know the firm has a pretty wide scope of seed to Series B, but you personally, and we talked about this earlier, your passion and your thoughts and your frameworks around Series A investing are really fascinating. Maybe you can tell us a little bit more just how you approach it and why it excites you so much.
Hmm. Yeah, I think like series like the Series A stage is just a really interesting time for a company, um, because you're really kind of focused on it. When you raise a Series A, you are telling the world, "Hey, we've achieved product market fit, and now we're going to go out and figure out if this is a business that can scale over time." And so post Series A, I think companies often make their first investments in their go to market team. They start building out hopefully scalable go to market motions, processes. So you start hiring your first AEs, sales leaders, market leaders, and that right there is almost the first test of the company kind of post Series A investment, right? Like can people other than the CEO or founder actually sell this product? And can you build a process that is repeatable over time and that you can continue to hire, not only your first AE, but your second and third, and they can get up and running as well. Um, and it's what I like about it too is that it's one of the first times in an early stage company where you see the CEO start to take off hats, right?
Mhm.
When I'm talking to seed and even companies that are going out to raise their Series A, you talk to the CEO and they're wearing all the hats, basically all the hats possible, right? They're managing everything. They're running lean. It's small teams, and so that's one of the first times that you start to see CEOs hand off things to like true domain experts who can go and run with it.
Yep.
And at least personally, anecdotally, it seems like when that happens, you talk to them a month later after that, like that first sales hire comes in and they're like, oh my gosh, I did not realize how much of a relief this would be, right? And how much they learn as well when once they bring in that domain expert. Um, and so that's kind of like the excitement, I think, immediately post investment. And then
Mhm.
over time, it's so interesting because then you really start to figure out, okay, um, is this a business that can scale over time, long term?
Yep.
I think part of this is because in my mind, Series B is like one of the toughest rounds to raise. I've heard several people kind of compare it to like the teenage years of a business. Um, and so it's really hard to prove that scalability, and I think to get to that point. And so that's also part of what like post Series A investment, what you're trying to do. You're trying to figure out, can we build efficient, scalable processes into this business?
Nice. Yeah, Series A is such an interesting time and a true inflection point of the company's growth, right? And
Mm-hmm.
we're hyper focused on the seed, but
Mm-hmm.
being able to see a company graduate to that level of maturity, and now, like you said, some of this weight comes off of the CEO's shoulders of having to sell, run the sales process, having to
Mm-hmm.
be the head of partnerships, whatever it may be.
Right, right.
You're able to formalize and crystallize a lot of processes now, um, and really scale them. So
Mm-hmm.
I can certainly resonate with those insights there. And as we wrap up the conversation, Nicole, I know one of your favorite books is Shoe Dog by Phil Knight. Tell us
Yeah.
why that book is a favorite for you.
Oh, I love that book. Partially because I'm also a big like just I love sports. I can't say that I'm a shoe dog myself, but I just love sports. Always have loved Nike growing up as a kid. And I think when you read that book for the first time, it's at least for me, it was surprising how many times that business almost died. Right? The amount of times in that book where he's like, "All right," and then I got the whole team together and we figured out what to do next. Um, it's I think one of the best books on just how difficult and how sometimes touch and go can truly be growing and scaling an early stage business. Um, and I think he does a great job of kind of walking you through some of his what he was thinking at the time, his mentality, and also the passion that is required on the CEO founder level to keep going even through the hard times. But it's a wonderful book. Could not recommend it enough. But those are some of the reasons why I like it.
Yeah, great book, great story, great company. But
Hmm.
with that, Nicole, it was great having you on the podcast. Really appreciate a lot of your insights. And what is the best way that a founder who's getting ready to raise or an investor who wants to reach out to you to share deal flow? What is the best way for them to get in touch with you or someone on the S3 team?
Yeah. Feel free to email us. Our emails are very simple. They are our first name and then S3 at s3vc.com. So my email is Nicole at s3vc.com. I'm on LinkedIn. I'm on Twitter, now X, all the time. So I'm available on all the platforms. Yeah, please reach out. Happy to always talk, and whether it be you're going out to raise or just want to connect.